Hi, everybody. Welcome to another episode of the Product Checklist, the podcast where we explore the methodologies, frameworks, and real-world strategies that drive successful product development in the Web3 space. Today, we are joined by Anastasia Nizhegorodtceva, Head of Growth at DeFactor, one of the world's leading real-world asset tokenization platform. She's based in Hong Kong, and she brings a decade of experience scaling fintech and digital asset product across global markets with deep expertise in the APAC region. With her background in fintech, mentorship at Outlier Venture RWA Basecamp, she has a unique perspective on building products that bridge traditional finance with DeFi at institutional scale. In this episode, we will explore the unique challenge of RWA, product development, scaling growth in regulated market and proven framework. Anastasia, thank you for being with us today and welcome to the Product Checklist.
Thanks, Dan. Thanks for inviting me, having me, and hello everyone who is listening in. Hello from Hong Kong.
Thank you. Please, can you give us a quick presentation about you and your journey in growth management leading up to your current role at DeFactor?
Well, sure. I guess I'll package the past 10 years in a couple of sentences. So I've started working in consumer tech out in Taiwan, and that was back 10 years ago when things like VR and augmented reality were quite popular. So I started with that and then went into sustainable tech, ran my own startup that got into an accelerator program in the UK for a couple of months. And then basically after sustainability tech, I decided to move to Hong Kong and work in FinTech. And that started about 6 years ago with traditional finance FinTech. So trading infrastructure for hedge funds and family offices, and then ESG data for, again, institutional players like banks and family offices, hedge funds. And then around, I would say it's been 3 years or so that I'm full-time in digital assets. I started working first in a custody firm. So obviously as a custodian, we work with various assets, not just RWA. And then eventually about 2 years ago, I've joined DeFactor that focuses on real world assets, or RWA that we call them now. And that's pretty much, I guess, to summarize.
Great, thank you. And what was the pivotal moment in your career that made you say, I want to be in the Web3 industry and especially in RWA?
Well, I guess Web3, if we just generally call this crypto, there wasn't like one pivotal moment, I would say. It was kind of step by step in terms of working in this industry. So when I was based in Taiwan, around, I think, 2016, 2017, the industry was, sort of new still. It's still new now if we compare it to the grand scheme of things like manufacturing and so on that's been there for decades. But 2016, 2017, if you remember, 2017, I think that's when Bitcoin started to get to 20K. And then everybody thought like, wow, this is the biggest deal. Obviously now we're way ahead of that type of price range. Essentially at that time, that's when it first started to pick up interest. Taiwan is a big hub for manufacturing GPUs, the graphic cards that we are useful for gaming. But besides gaming, they also happen to be helpful for mining and especially Bitcoin. Around the time of 2017, that's when my friends from Eastern Europe, I'm originally Russian, so I have quite a network of people in Eastern Europe. They started to reach out to me because they were building out mining farms and they wanted that equipment to mine. And then I was like, oh, what's mining? Why GPU? And they were like, no, like you go to these exhibitions for hardware and find those graphic cards. So that was my first sort of like step into what is Bitcoin, what is mining, like graphic cards are helpful and so on. And then around 2017, 2018, there were quite a few, I guess, like new conferences. So Taipei started to host Asia Blockchain Summit, which I believe still happens yearly. And then I attended the FinTech Week in New York. Then I also happened to be in London for that accelerator of my own startup. And then the London Blockchain Week was quite interesting. So I kind of started to go to these conferences and listen to what people are doing. And I thought, okay, like this is really the newest tech out there that like newer than this, I cannot really imagine. Like blockchain just sounded so revolutionary at that stage, even though it was just a better way to manage data really and a database on the chain that just happens to be called this fancy word blockchain, right? And then from there on, I would say the next sort of pivotal moment was when I was here in Hong Kong already and working in the traditional finance tech. And then basically Hong Kong just started to be a lot more, I suppose, like keen on digital assets. Like before, it used to be kind of all over the place. Then a lot of things were unregulated and sort of gray area. And then China banned crypto. That was a big deal at that time. And it was kind of like a sort of strange industry, 2019, 2020. But then kind of like gradually it became more and more regulated, formed as an industry. Now, we have the stablecoin bill and the ETFs for Bitcoin and Ethereum. Like, it's now grown to a very kind of like recognized and I would say well-respected space. And we have quite a few home-based companies that run big things like, Bullish acquired CoinDesk and they run Consensus, and Bullish is based out of Hong Kong as a team. And, like things like FTX happened 2 years ago, and FTX was partly a bigger team based here in Hong Kong. So things like that started to happen. They were quite recognized. So yeah, from that perspective, that became sort of like a moment for me to say, okay, well, Hong Kong was a good place to be exposed to this industry, to know these people, to build something. And then specifically what's the pivotal moment for RWA? To be honest, that was the FTX crash, because at that time in the market, I just thought like, what's out there that's there to stay? And of course, people had been trying to sort of tokenize assets, and they started with STOs, and we called it different names. And recently it's been RWA as the name. And yeah, when the FTX happened, I just thought, out of all these different products that are like the meme coins or some sort of hedging strategies, trading strategies, everything that's sort of volatile, what is there that is the most relevant to the traditional world? And I thought real world assets actually make sense. That's something that I can explain to my mom in terms of what I do. And that's sort of what keeps me attracted to this industry until today.
Okay, so actually you talk about your mom and explaining her what is RWA. Actually, how would you explain to her or to someone completely new to this industry, what is RWA?
Well, so RWA stands for real world assets. And to be honest, I think it's quite a fancy name, because any real assets in this world is an RWA. So a property is an RWA, gold is RWA. Basically, any assets in the traditional markets that we're used to seeing, all the commodities and precious metals, any non-real assets or like non-tangible assets, like let's say financial structured products like bonds and invoices, for example, they all can be tokenized. And really, tokenization is maybe a scary word for somebody that's not from the tech background, but essentially it's just a different way to represent the asset. And it is represented digitally. It is on chain. Again, whether you want to go deeper into what on chain means or not, but I think for people that have just a very basic understanding of tech and blockchain and Web3, it's basically a new way of managing your assets. It's not less trustworthy. It's not riskier. It's not magic. It's just a different way to manage assets. And what it is really is definitely more agile and definitely brings more efficiency in the markets, because the technology just makes it, I guess, like a lot less paper-based, if we were to put it simple. Anybody who had ever gone through accounting back 20 years ago and had to have an actual book where you record transactions of the company and then put that all into like some sort of CRM on their first computer knows what that sort of digital transformation means and how much value it can bring. So now let's just say we're having the digital transformation 2.0, where we're going from like Web 2 to Web 3 type of activities, but basically it's still the same. You're still managing your assets. It's just a new digital way.
It's like bringing assets from paper to digital. Yeah,
exactly.
Great. Okay, I like that. And if you are to describe product management for RWA tokenization platform in one sentence, what will you say?
Product management in one sentence, I would say build to scale. So product management, when you're building your platform, if it's tokenization of whatever real estate, because of the capabilities of blockchain and what it can bring to you, really just from the day one, start building with the scale in mind. I would say like that's pretty much how I see product management in our industry.
Okay. How does growth management for Web3 product like DeFactor's RWA platform is different from traditional fintech growth you already have experience in your previous background?
So I guess like growth management, meaning like pre-sales, business development, growing essentially the number of people that are aware of your brand, aware of your product. My previous companies were traditional finance customers, right? Like institutions that are dealing with tech, but that tech, I guess, essentially was there for them for years. So I'll take an example of the trade execution system that I had worked with. So if you're running a hedge fund, if you've been running a hedge funds the past 20 years, you kind of know all the different counterparties you have to engage with. You have your data providers that supply data about, equities, derivatives that you're trading, fixed income products, and so on. Let's say you're a long short equity fund. Like you basically buy a bunch of stocks, hold them, sell them, and, profit from that. So you, in simple way, kind of need to have that system connected to different providers that essentially give you the pricing of those equities from different jurisdictions, different markets that you're trading. You have to have your PMS, which is a portfolio management system, where you will have your book of all the different stocks that you bought, when you bought them, at what price. So you have some sort of analytics of how your portfolio is doing. Anybody who had used interactive brokers can kind of also visualize what a hedge fund operations look like, but obviously different scale, different type of money as well. But, in its sort of basic understanding, it is basically managing something that has been there for 20 years, and there are different providers. So you approaching or growing the network of your potential customers, you will be talking about something that they're quite familiar with, and you don't need to understand, like you don't need to explain to them and get them to understand your product based on the pain point that you're trying to solve for them, because that pain point had probably been solved for them in some way or form by different products in the market. Similarly, another project I had worked for is an ESG data provider. ESG became a big thing a couple of years ago, and companies started to be required to publish their data about their carbon emissions and how much wind energy they are using and so on. And that emerged into a requirement. So these companies started to be familiar that as a company that's reporting these things, I need to have access to ESG data. And therefore, for Neotech, the company that I worked for, basically it made sense that, okay, our product is something that we don't really need to explain much to, let's say, an analyst at a bank that is trying to look into the green, so-called ESG green or social kind of governance aspects of a company that they're trying to invest in. Like we didn't need to explain to them why they need that data, because they knew that they would need. They might have had access to different data sources, and we would be one of them. But the need for that product didn't need to be explained too, complicate in a too complicated way. Whereas for Web3 and tokenization of assets, what we see a lot of times is people basically questioning, like, why do I need to tokenize assets? If they had figured out how valuable that could be for their business, then there's a bunch of other barriers. Like, does it actually, basically people don't really know yet how to interact with it, and they question how does it actually work, and whether it's going to be all secure and compliant with their policies and so on. So it's very different in the sense that it's a very new product at the moment. And there's still not that many users and the end users and B2B users that are familiar with why and how they would interact with it.
Okay, so it's about market timing and how people are confident about the technology.
And also education, I would say. So I think, it's always that I bring up to projects, because we're B2B, like at DeFactor, we provide tokenization infrastructure to other platforms. Like, let's say you're tokenizing real estate or you tokenize precious metals. Those are like different platforms that would use our tech. And so whenever I talk to them, I would certainly suggest for them to push for education first, because it's really kind of crucial for really educating their users of, how it works, why it works that way, and so on.
So yeah, it's about understanding and why is it needed. So yeah, it's definitely about market timing. About this topic, how do you assess market timing for growth opportunity in Web3, and what signals you look for to know when the market is ready?
I guess, well, there's different metrics, but I guess like the most valuable one is whether the product has users. And I suppose that's when the market is ready. So in Web3, the most, I guess the easiest and the most common metric, I suppose, is wallets and their engagement with the product and the network. So how many downloads of your product you've had is more of like a Web2 metric, because a lot of companies now have apps, and then they look at like how many downloads my app has had on, like, let's say, Apple Store. So similarly, you can see like how many wallets connected to my product, how many wallets actually hold the asset that I'm trying to distribute, or maybe I'm distributing many assets, maybe I'm a marketplace, and the transaction volume between many different wallets would be the metric for me. So basically, not so much who are the users, but at least that there are users that had connected the wallet. I think that's the main metric. And another bigger one, I guess, is the funding, really, because if VCs had come on board and some prominent names, you mentioned Outlier Ventures, Basecamp that I had experience with. Like, I think if you're a startup and you're fundraising or you're going through an accelerator program, and let's say you do have those first users or so-called, early adopters, they did start interacting with your platform, they connected their wallet, maybe they didn't buy anything yet from you, which also, of course, is a different metric that is even more important and more, I guess, exciting when somebody actually bought something and spent money on your product or crypto or whatever, stable coins. But for a startup, like if you had fundraised and it is funding not from 1 or 2 angel investors that you just personally knew, but actually from a VC that's focusing on the Web3 space and they're maybe quite well known, like I think that brings a lot of validation to the project as well.
Okay. And especially about the adoption curve right now, where do you think we are currently with the Web3 space and especially RWA product market adopt?
Where you mean like on kind of larger scale with like early adoption and majority and that kind of scale?
Exactly.
I mean, I hate to say it, but I think we are still early. It's still not like we are buying properties by connecting our wallet to something, and that's all it takes. I would love for the space to be a bit more advanced in that sense. In, I don't know, 5-7 years, when you don't go to your real estate agent with a bunch of papers and your passport and all the stuff, and they bring the deed on the other hand, and it takes hours to complete the deal. But instead, you just give them your wallet address and they send you tokens that represent that apartment, and there's pure trust, and it's all been regulated and properly, set up with the onboarding and KYC and so on. But I would say we are still quite far from that.
Okay, so for you, the future is about trust, transparency, and speed.
Yeah, absolutely, for sure.
And actually, right now, what are the most critical growth decisions that Web3 team get wrong when they don't understand the complexity of multiple user segments, and how do we approach this differently at DeFactor?
What they get wrong
Yeah.
as a critical decision? That's an interesting question. Wow. I think what a lot of not just Web3 companies, but I think it applies to a lot of startups, especially tech startups. Okay. I think there's a common problem of focusing too much on the product and not as much on the problem. There's even a book about that, how to build from the problem, not the solution perspective. And all the tech people are guilty of that because why? They start creating something, they're in love with their product, they think they're revolutionizing the industry, changing the world and so on. But oftentimes they get so much into this process that they forget about the first user feedback and pivoting. And I think like having worked with startups and having run teams of startups and working for the CEOs the past 10 years, I think the most valuable, I guess, like lesson for me and kind of like a realization that I came to was that the sooner you pivot, if you needed to pivot, the better, because you need to always adjust. You need to always be ready for the fact that what you've worked on the past 8 months actually is kind of trash and nobody wants this. But maybe that 1/10 of the whole idea is actually key and they really need that. So double down on that 1/10 of the process, drop everything else, make sure that you focused on the right thing and then keep pushing. Because in the end of the day, the market is what you really need to listen to. So I think one thing that a lot of startups get wrong is that they start to go heavy into that direction that they identified as the ideal sort of roadmap. They fundraise for it, they hire 50 people, and then instead of listening to the market and going very lean in the beginning and having a smaller team, maybe just a simple MVP, but still first get that MVP out to your first 10 users. Don't go all full-blown bells and whistles platform and then start testing it, and then turns out there's only 50 wallets in the world that would want to interact with it. So that's, I would say, is quite a big problem.
About the pivot, how will you advise, or how the teams know they need to pivot? Is it about the product itself, or do they need to change the market segment?
I would say it's both. I guess like from the business perspective, you always need to kind of listen to different market segments, right? You might have the product that you had identified as solving a problem for one market segment. You launch, let's say, sort of like my suggestion that you keep it lean. You just launched an MVP and immediately you go to testing the market instead of building the whole thing at first. You tested the market and then you found out actually, let's say, I've targeted wealthier individuals because I thought that, somebody in the bracket of whatever, let's say 10K a month revenue would want this platform because they have the money, and the savings each month to basically buy, I don't know, tokenized gold, let's say. And then it just turns out then for that particular jurisdiction, actually these people from that category, they don't really want precious metals because they already bought those precious metals through their, I don't know, HSBC account. And they actually want something more exotic because again, they still have the money every month, but now they want to play around with something that has more upside. So it's a more volatile, maybe riskier asset, but more interesting and brings them more returns because more like, I guess, like safer options for them. They had already explored those, like, let's say, precious metals and gold with traditional platforms. So the tokenized gold doesn't actually appeal to them. So then you see that you actually have a platform and you have the MVP that tokenizes precious metals, but the category of those people wasn't really the right one. So maybe you need to change the market segment to a different jurisdiction where people didn't have access to that type of precious metal product in the traditional way. Maybe they were never eligible to be onboarded on those platforms. Maybe they're from a different country that doesn't even have an interactive brokers type of platform. So maybe you should target those. And then at the same time, maybe this technology that you've developed in your first MVP is actually applicable to more products rather than just precious metals. And then that first segment that you've identified could still be relevant, but deliver a different tokenized product to them, not precious metals, but maybe something more exotic. I don't know, tokenized cannabis farms in Colombia or something that is like, high yield, very interesting and very risky at the same time, but they will be excited about that. Being able to switch from different market segments and also adjust your product without changing like the core sort of technology that you focused on, I think that's what pivoting is for.
Okay. And and once you find your market, you need to deal with what we call regulation. And that's a big part of the product. So you have worked across different markets, Asia, Europe, and now globally in Web3. What is your methodology for building growth strategies that work across different regulatory environments, also user behavior?
Methodology, I guess, well, having dealt with different startups that we talk to, under DeFactor's umbrella, they do come from different jurisdictions, that's for sure, like different markets. I think Europe, US, Australia, to some extent, they're very developed. And I guess like the methodology of working with those markets is really trying to have regulated partners in those regions because those type of regions, they're sort of ahead of everyone in terms of developing sort of frameworks, and they usually really try to be regulated and having everything sort of by the book compared to emerging markets, let's say. So with those jurisdictions, since obviously DeFactor is a tech company first, and we are, trying to be good at what we can focus on, as I think everybody should be. The more you're focused on something, the more successful I believe you can be at that. So instead of claiming that we're experts in all the different jurisdictions, we rather prefer to leverage a network of partners there. So we partner up with different broker dealers, European Union, obviously the regulation there is quite, you can tell me more than I can tell you about, the regulation that's in your region. And the MENA region, UAE, with VARA and, a lot of startups moving there to distribute their tokenized assets. And again, Hong Kong, Singapore, we also have quite an advanced framework here, I would say, for regulating these assets. So really partnering up with providers of those platforms that can have distribution for these assets in a legal and compliant way. I think that's number one sort of strategy for us. And then I guess the emerging markets is something that we work with more on like like exploratory basis. Like we go to these different events, we find smaller startups, Latin America is very exciting, Africa is very exciting, Southeast Asia is very exciting. Like these places usually have some kind of like individual way for each startup that they had figured out how to work around their assets. So we always try to be open and learn from them and try to connect the dots and see like, okay, if this project had dealt with a certain asset or a certain customer base in this way, maybe it's applicable to another emerging market, because drawing those parallels being based on that type of market, I think has been helpful for us to be able to deliver value to projects.
Okay. So yeah. So yeah. I think so. You talk about. I mean, we talk about the outside aspect of the company. Let's talk a little bit about the inside aspect of the company. So about the team. So with your experience leading growth across different functions, how do you structure collaboration between growth, product, tech team in a Web3 company, and especially when technical blockchain constraint can impact the growth strategy?
Well, the technical constraints, they don't, wouldn't say they necessarily restrict the growth strategy. Of course, we always can deliver something to external people when we talk to them, only to the extent as much as it is developed, right? But then running a startup is always about, fake it till you make it type of mode. So this is not to say that, we oversell and underdeliver, but more to say that when you're talking to particular platforms that are interested in your product, and then they also have a specific roadmap around their own platforms that might include other features or kind of like a variation of your product that you are delivering to them. It's always helpful that we have a very agile tech team. Actually, our tech team, which I'm pretty proud of, they come from like native crypto background. So they've played with a bunch of DeFi platforms themselves. So they came from the user background type of experience. And so whenever we as the growth team, business development, growth, sales, whatever you call it, like we talk to a bunch of projects, right? All different jurisdictions, different asset classes, different roadmaps, different plans, and everybody thinks they are the best, the next biggest deal, in the world of tokenizing assets. And they come to us with different problems. And if it's not a clear cut, plug and play of our product to them, we always try to collect the feedback and see, okay, well, if this is the part that you can take from our product, but you also have demand and, strong interest towards a different sort of variation of the product, we'll always take it back to the tech team because it's a very new industry, even though we do have tech that is developed and working and had been deployed for customers. There's no, ceiling in where it can grow from now because, again, it's very new. It's not like we've been like Thomson Reuters for years on the market with our systems. That's the advantage and the disadvantage at the same time, right? Because when you are talking to projects about it, they always doubt you. They don't know how to interact with the product yet, as I mentioned, before. But at the same time, it's an advantage because that's the time that we can build, that we can iterate, and essentially we don't have the legacy of 20-year-old software that is like too hard to change. And the spaghetti code, if you're familiar, I don't know if you have friends that are engineers, but I do. And the term spaghetti code just basically means like nobody can find how to fix any bugs. Everything is sort of just tied into one big endless code base. And that's a problem with a lot of legacy type of companies.
Okay. Yeah. That's very interesting. So as you said, it's a early industry, and we are quite at the beginning of this space. Actually, how do you discover and validate growth opportunities when you are dealing with technical product in the RWA space?
Sorry, I guess it cut off. How do I validate the opportunities? Is that right?
Yes, exactly.
So I guess discovering different products and platforms, talking to them and validating whether that's a real opportunity for us to collaborate with them and deliver our tech to them, or maybe try to find a different way to help them. I suppose like for each specific market segment, we would try to see how many users they have or whether they have users, because that's, I suppose, like that's the main thing to see in our industry because we're so new, that there's so many platforms that they claim it's like, it's this and that you're tokenizing properties, and, we have this many properties listed on our website. But like, let's say you're in test mode. Okay, how many wallets had interacted with your platform in the testnet? Like it's still something that you can have. Like you can still validate the user interest. But like, again, if there was none, and then you're building into like, I don't know, different pipeline stage, whatever, 2, 3 of your product without that first validation, then it's really hard to gauge how to collaborate with that type of platform and how much actual demand they would have. Because, I mean, at the end of the day, I think it all comes down to who has users, the end users of their platforms.
Yeah, so it's always about the users and the activity on your platform. Okay, so about the role of growth manager, the role you are actually doing at DeFacto For you, what is the pivotal role of a growth manager in a blockchain product launch, and how is it different from traditional fintech or SaaS product launch you've already experienced?
So, I mean, for traditional SaaS platforms, as I mentioned, like as a growth manager, your work is more about delivering a product that they had been familiar with, basically trying to convince them why this platform is better than the other platform. Because the market is there, the product is there, the problem had been identified for years, the solutions had been identified, delivered, and had been used by your users or your target audience also for years. So in that regard, like, are more of a, prove that you're better than the competition type of mode. And as a growth manager, I suppose like it's a little maybe easier for you in that mark, because the segment, and the target audience had been already identified, and probably there's like spreadsheets of contacts of, let's say, all the family offices registered in Hong Kong, and then you can download it or buy it or get access to them, and then you cold call all of them. I mean, I'm just, simplifying the process here, but essentially for, let's say, a trading system, the customer had been there for years. And if in fact we have resources to find those customers. In Web3, it's completely different. And as a growth manager, you have to basically be open to changing your pitch every now and then. Maybe this quarter the pitch is this, and then 10 months later the pitch is a bit different, and you have to be open to the fact that the target audience you're working with is going to change, or maybe will just be modified a little bit. And of course your product is always changing, like that's just by definition. Your product is always in that development mode, because the industry is changing. Essentially, it's always more demands from the users. You can probably always try to get better as a platform in Web3, and there's kind of no ceiling, no limit of you becoming relevant to the market. You can always add something to be even more relevant. So yeah, the growth manager, you kind of need to stay open and be very kind of ready to some ad hoc changes with the market, with the product, with your approach and how you pitch.
About that, about staying open and in a growth space in Web3, do you have, I don't know, I will say, any advice or strategies to run growth experiment in RWA? Is it totally different from Web2, or is it sometimes quite the same? I will say in Web2 you have to test, learn, and iterate, or is it a totally different approach in Web2?
I would say it's quite still applicable, like A/B testing, for example, right? Like that's a term that I believe is also quite common in Web2. You tried A, and then you try B, and then you compare the results. I think at the end of the day, like, we are still part of the tech industry, so pretty much still function the same in terms of the path and how you treat your customer. Like at the end of the day, like, it's also a user of your tech platform, and just like there are users of Web2 tech platforms, right? So it's very similar, I would say.
Okay. And actually, how do you measure the growth success when you're dealing with different type of customer? For example, when you're dealing with institutional clients, retail user, and ecosystem partners.
How do you measure the success? Well, I guess for all of them, I suppose the success measurement could be different. Ecosystem partners, for example, right? Like, it's what are the partners you can find that are not just like in Web3, I would say, like, it's quite common to just have a partnership for the sake of announcing a partnership. And there's so many of these announcements, on Twitter. Oh, like, company X is partnered with company Z, and like any substance behind the partnership is like pretty hard to see in, I would say, 70% of cases. And the other 30% is where, like, you've actually built something together, and then you're announcing it. And I think that's quite a Web3 crypto characteristic, unfortunately, in my opinion, because I think there's too much noise and not a lot of, like, people actually had done something and implemented and deployed, and then they're users, and only then they talk about it. So from the ecosystem partnership perspective, I would say finding the partners that are actually bringing value, and there is like a substantial benefit from us partnering with them and also for them partnering with us. And then, of course, the audience of both companies that are doing the partnership is also important, because, of course, partnering with somebody small is maybe it's a meaningful partnership, but if they don't have that much audience that follow them, that it's also not as many eyeballs you get onto your brand if you partner with someone small compared to somebody bigger. So the scale and the size of the audience of that partner is also meaningful. right? If we're talking about clients and the users of your particular tag that you're delivering in Web3, then I guess the measurement is completely different. The success measure is always who paid for your product, right? And if you delivered the product to a number of customers and it was all for free as part of the POC, that's definitely some validation, because if they really had the users and it's been kind of used, it's good, better than nothing. But I think the ultimate validation from customers is the payment and the fact that they really valued your product so much that they had paid for it as a proper software as a service model. So yeah, depends.
Okay. So let's talk a little bit about your experience and your skills actually. As a project growth manager, where were you more, I will say, comfortable? Is it in the phase of validation of the product? Is it in the phase of the scalability of the project, or is it in the phase of big expansion?
Where I'm the most skillful or
Yes,
interested?
Exactly. Good question. I will say more interested for you.
More interested. Well, I mean, I guess obviously I've shared some of my background, so my skill set has been mostly around, the product launch and the startups and the earlier stage platforms. Even if their product wasn't new, at least the company was new-ish, and small. And because all of my experiences had been pretty much under well, except for two companies, I guess, had been pretty much 25, 30 people. And those other two companies, I guess, I got the exposure when they were rather small, but then they kind of scaled up a lot. But basically from, I suppose, as a growth person that's delivering the product to the market, I had mostly worked with rather the first sort of onboarding and experimenting with the product and, optimizing a lot of things and validating the market and kind of bringing the product to market. Whereas I guess what's the most interesting for me is, I think, always that part where now we've acquired some market share and it's all about optimization and scaling, because I think that part really interests me the most. First of all, because there's some validation that the product market fit had worked and what we've built is actually needed. So there are some users and there may be paying customers already. They might not be, 10 or 20 of them, but if there are 5 of them and somebody, started to use your product and paid for it, I think that's, a really good foundation for scaling. And yeah, really figuring out how to optimize this to scale as fast as possible. I think for me, that's the most exciting part.
And during this part, what's the most important artifact you have to create? Is it a growth strategy document? Is it a user journey maps, experiment frameworks, or something else?
It's a difficult question. I don't really spend, to be honest, too much time creating these kind of documents because they always change, because the process changes. I would say if you can save time on developing too much of this type of materials, if the product is still sort of in its iteration stage, I would say simplify everything by a small video, short video. Try to bring everything rather to calls and actual human interaction, because while you're in that stage of building trust for your product, I think more kind of human interaction and having that exposure to talking to the users, maybe getting their first feedback about what you're building. I think that's more important rather than having a bunch of things, PDFs and so on. Although with DeFactor, for example, we've had a lot of work in terms of delivering content like podcasts and ebooks. And I think it's all helpful for educating the industry. And again, I think I've mentioned that before, education is very important, explaining to users how tokenization works, why it's helpful in some kind of interactive way, whether that's a video or a book, an ebook. It's helpful, and especially because the industry is very new, but making it very specific to your product, if your product is in the early stages, I would say these sort of strategy documents, PDFs, and so on, it could be too much effort compared to the ROI on that effort, just because everything might change tomorrow or next month. So I would say focus on quicker content, quicker notes, use AI as much as possible. I tell it always to my team and everyone, I think we need to leverage what we have. If we don't use the tech that's out there, then why are we building some sort of tech expecting people to use it? So yeah, I think use all the tools to make it more efficient.
Nice. And for you, what is the biggest trap new growth manager fall into when they are building RWA space?
It's an interesting question. The biggest trap for the RWA, I guess. I think I think it's something that I like and I don't like about our industry at the same time. And I think that's why it's a trap, because I think it's applicable to many products and projects. And maybe somebody who's listening might not agree with me on that. But because it's real world assets, as I mentioned before, that's kind of why it got my attention in the industry and why it made me join and still stay until today in this industry, is because it's the most relevant to the traditional markets. As I mentioned, it's easy to explain to my mom. It's the kind of thing that people in the bigger market, right? If we look at all the trillions of dollars circulating in the capital market space, tokenization of those assets in the capital markets is still a very, it's a fraction. I think it's not even like 1% of all the transactions in the world are in stable coins right now. So we're a long way from being like a widely adopted product if we're talking about, like, let's say blockchain being underlying technology of all of these payments and infrastructure, all the fancy words like RWA and PayFi and these things. So we're still a small fraction of that bigger industry of traditional assets. And the trap is that we're very similar. We're like in a very similar space out of all the crypto, meme coins, anything else that's very hard to relate to for this traditional assets, industries and people. At the same time, it's a trap because you building this product and you're thinking, well, that's easy, right? Like you've been buying real estate. Now you just buy it in a tokenized form because I'm not trying to sell you a coin that has a dog face on it, right? It's not something that's like hard to believe in. It's like the same asset, is just, the different infrastructure around it. But at the same time, it's a bit of a trap, I believe, because then these users might actually question, why do I need this type of platform if I already have access to those traditional assets in the traditional form, like Web2 type of, journey? And there's this trust issue. So then actually it's not that quick to convert them from like a pure Web2 user to like a Web 2.5 to then Web 3. So I think, being more realistic around how much work there actually is about educating your customers, even though you're building something that, well, supposedly is quite familiar to them.
Okay, so everything about education and helping the customer to understand the value of what you are building.
Yeah, correct.
Okay, let's talk about a little bit about what we call the pilot metrics: acquisition, activation, retention, referrals, and revenue. In your opinion, and based on your experience, what is, for RWA company, what is the most important stage and why?
Well, at the moment, I guess because we are sort of in the early stages, I don't think there's that many companies that are at the revenue stage or referral stage, not even maybe retention stage for their product. I would say a lot of the platforms in the RWA space had some customer acquisition. So they do have some users that did connect the wallet, they did transact a little bit on chain and interacted with their products. I think activation is probably the most important part right now, because like, let's say you've grown your audience a little bit, you've launched your MVP, maybe you've launched the testnet first, then the mainnet version of your product, and then essentially you've had some wallets interact with it, and that's all going well. But then how do you actually make them spend more within your ecosystem? So I think that's pretty crucial for most of Web3 projects.
Okay, and for you during this phase of activation, what is the single KPI if you have to choose only one? What is the ones that tell you you are about to reach your target?
Getting the number of wallets connected and transacted on your platform.
Okay, so, but there is a thing that say someone can have multiple wallets. So how can you make the difference between number of people using the platform versus the number of wallets actually activate on the platform?
So let's say you have a platform that has connectivity, right, to wallets, and as a user, let's say I connected my MetaMask and I connected, I don't know, Phantom Wallet, or maybe I have a custodian where, as an institution, so that's a completely different example, obviously, from retail, but let's say I'm a custodian and I have institutional clients, so let's say there are different funds and hedge funds, family offices, they store their crypto with me as an institutional custodian, but essentially it's still a wallet. These funds that are in all of these different wallets, retail or institutional, they're just there. But once you connected them to some sort of, let's say, DeFi platform or yield platform, and you started to have some interaction with products, let's say you bought tokenized real estate and then you borrow against it in USDC and you locked that tokenized real estate as a collateral. that's a whole bunch of activity with your wallet, because your wallet first had to buy that token that represented the property. Then while you had that token that represented, I don't know, let's say 20K USD worth of a property, then now you go and you borrow against it, but it's over collateralized. So you can only lock 20K, but borrow, I don't know, 15,000, let's say, based on that collateral. Now you have 15,000, let's say, USDC in your wallet. That's again an activity. So having a bunch of wallets just connected and sitting there doesn't really bring value to anybody, I think. Although, of course, it definitely validates whether the platform works, but the real interest from the users, I think, really comes from those transactions. And so if you do have those transactions, maybe I've connected 5 different wallets, but if one of them really made so much interaction and transactions on your platform, then I mean that one wallet would count as a metric.
And during this phase, for you, what is the silent killer? The things that look like success, but actually indicate there is trouble in the growth of the product?
That's a very complex question. I guess, let's say, going back to the wallets, right? Let's say you had your wallet connected, and then so for the platform, you're like, okay, great. I have 20,000 wallets connected to my platform. And it seems like they're all super excited about getting an airdrop of this new token. So everybody who had, let's say, DeFactor, for example, right? We have our own token. It's called Factor. Let's say everybody who has Factor token now would get token X as an airdrop because we just launched our product for the project X, and as part of the co-marketing and to activate the users within our partner project, we just want everybody from the DeFactor's ecosystem to just go ahead and have access to their platform, the platform X, and basically go and interact. So they get an airdrop, and everybody who had one Factor token gets 2 X tokens, and they go and they now can connect to the platform X that is, let's say, using DeFactor's tech, or there was some sort of other co-marketing with them. And basically now these users have that token X in their wallet, and they can connect to the platform and, I don't know, maybe borrow against the token X or stake it or do something else. That kind of looks like a pretty good metric, I would say, and a pretty good sign. It could be a bit misleading, I suppose, for those type of examples where there was no substantial use of that token X. So this was just an example, kind of like to put some names, Factor token and X token. But obviously it is, it's like airdrop. That's the concept that I would say it's kind of misleading in the industry, because sometimes they are valuable and really provide a lot of growth to projects that just kickstart, and they kind of piggyback off of the growth of other projects that are more established. So you get an airdrop, and then you can actually go and interact with the new product. But because there's so much of it happening and everybody gets airdropped everything in this world, unfortunately now, like it's kind of a little bit all over the place, and you would see things airdrop to your wallet, which is even, I guess, like scarier, because people that are not experienced users, they'd be like, oh great, I got money. But it's actually like a different token that they maybe shouldn't be interacting with. So I think that's where it brings a little bit of trouble in the industry, where this activity on these wallets, which, as I mentioned, could be a good metric for whether the product is successful, now kind of gets mixed up with a lot of stuff that's happening in the industry that's a little bit gray and not as valuable, and there's maybe no substance behind those type of assets that are being airdropped. So yeah, I don't know if that helps to understand the question. It was a good question though.
Yes, it's if my understanding is good, it's more about having a critical thinking about the data and see actually, okay, there is activities, there is figures, there is things happening, but is it real and does it bring value to my project?
Yeah, correct. And whether there's value behind these projects that are, airdropping tokens and so on.
So yeah, and as you said it's always about education and understanding about what is happening.
Yeah, absolutely.
Okay, and we already are at the final section of this episode. We are going to have quick question, looking for short answers. Does it work for you?
Rapid fire round. Okay, great. Yeah, I love those. Sure.
So,
do I have like 10 seconds to answer or 1 second to answer?
As quick as you can, but it's open.
Okay. All right, let's go.
What is the best advice you ever heard in the Web2 space?
Buy Bitcoin.
What is the worst Web3 advice you ever heard in the Web3 space?
Well, I guess making it narrower to RWA as part of the Web3 space, I think the worst advice that I hear from projects that they got is like, tokenize your assets, you will have liquidity and instant, growth of investors. I think that's certainly terrible as an advice because it's not always the case, unfortunately. And there's like a lot of other things to consider besides just, hey, I tokenize my assets and it brings me billions.
What is the most underrated growth management skill when building Web3 product?
Underrated. I think actually being silent, because I think Web3 as the industry is like very salesy. If you go to, I think you've been to Token 2049, right? Everybody's talking about their best thing that they just built, the next biggest whatever. And actually listening to what people are building and kind of carefully asking them questions and then again listening more than talking, I think that's the skill that's really underrated. And everybody is like, there's a lot of talk basically and everybody's pitching, but there's not so many people that are like actually there to kind of understand, okay, are you solving a problem? Can we do this without the blockchain? That's my favorite question. Like, do people ask this question really, or do they just assume they need to do it on the blockchain and then they'll start talking about it, and then it's really hard to see the real value.
What skill differentiate great Web3 growth manager from good ones?
Staying agile and pivoting and changing.
What is the biggest growth friction in Web3 product that team consistently underestimate?
The biggest friction, I think just the user onboarding, like that whole process, UX, user experience, that's the biggest friction in the industry. I don't think it's underrated because I think everybody still talks about it. I think it's a pretty big deal in the industry still, but nonetheless, nobody has nailed down that part yet. I think there's not that many platforms that you can say like, oh, that's a great user experience. So I think that's pretty much the biggest friction in the industry.
What is the first dashboard you open every morning when you are monitoring growth performance?
Well, it's a bit, I guess, for my, scope of work, where I kind of work, it's always Web 2. So I've mostly worked with Web 2 products. And of course, now with DeFactor, we're an infrastructure provider. So there's not so much metrics in terms of like, let's say how many users downloaded our app. Like if you were to compare it to like, I don't know, any app on Apple Store, right? That is B2C, right? But I think the overall, again, coming back to your question, what I wake up and look at, it's actually the market itself. So I have it on my screen on my phone, all of the prices, well, not all of the prices, but I don't know if you can see it. It's basically from the trading app, you would see BTC, ETH, and then it's BNB because it's mirroring the Binance pricing from the Binance platform. But essentially, looking at that, kind of, I wake up and I look at Bitcoin price, ETH, and I kind of see, okay, where are we in the market? Did something happen drastically overnight? And as a company that is a B2B company in the crypto space, that's a good metric, I think, because in the end of the day, that kind of tells you whether projects are doing okay or some liquidity crash happened and somebody's out of business suddenly. Those type of market volatility events are happening sometimes, or black swan events that we call them.
Okay. And what is the most contrarian thinking you have about sales in Web3 that actually works, but it goes against conventional wisdom?
Interesting question. So about sales in Web3.
Or growth.
Yeah, sales or growth in Web3. I mean, I guess like conventional wisdom is that, I guess like Web 2, like conventional, I guess like if we say it's Web 2 or traditional products, there's, I think, a lot of that where the person that's buying or paying is the person that's, I guess, consuming the product and looking at something as a user interface, as the product itself. Whereas Web3, since it's been, I mean, like, why is it called Web3, right? Like there's like you and your data, and then the company. Like it's not Facebook that owns your, data in the Web2 sense, but it's Web3 because it's like now decentralized, right? So there's a lot more kind of like aspects to the product, I would say, than in the conventional way. So when you deliver that growth strategy or sales strategy, you kind of need to keep that in mind, that like maybe the user is looking at something and then interacting with the product in this way, but then at the same time the actual payment comes from like a different angle. Maybe you're selling, other like functions around the product that is not actually from this user, but like from a passive type of revenue stream that is emerging based on that yield that they are generating. I mean, that is basically to say that Web3 is quite complex, I suppose, as a product, and not all the conventional metrics and strategies for sales work, unfortunately.
Okay, and the last one, what question did I not ask you during this episode that I should have asked you?
Well, I think everybody is finishing the fire rounds with your prediction of the Bitcoin price, or like where, or like how many tokenized assets we will have, or some kind of prediction of like what would be the most adopted tokenized asset. I think that's what I get the most. So that I kind of expected that to be in the fire round, I suppose. So I don't know. Pick one of these to finish with.
So I mean, is there anything you want? Do you want to talk about this, about prediction price?
Well, I guess like asset class, that would be the most relevant. I would say tokenizing precious metals would be like the most adopted industry, I guess, like let's say next year as an asset class, because I think it's quite easy to understand and there's a lot of assets, precious metals out there that are easier to measure in terms of their output. And yeah, I think that could be one of the top on the list of people who actually would interact with them. Like that's what I'm saying. That's why I would say like tokenizing them would make sense, because the audience would actually be there.
Oh, okay. And actually, where can our listeners follow your work? Any social networks do you want to share, project, or what sources?
Yeah, just LinkedIn, I guess. You can drop my LinkedIn link in the comments to your podcast. DeFactor is on Twitter and also LinkedIn as well. And yeah, check us out. We also just co-founded, so we're a founding member of a sister company to DeFactor. It's called RWA.io, a more memorable domain, I suppose, a very successful name. That's aggregating all the data about real world assets. So that's quite new. It's a few months old as opposed to a few years old like DeFactor, but growing organically and super fast. So quite interesting to check out as well.
Okay, so yeah, so final words about, so thank you very much. Thank you for educating us about RWA. Thank you very much for your time and your insight you share with us. Actually, to our listeners, check out the description notes for the links to Anastasia's work and the resources mentioned in this episode. Thank you for watching. See you at the next episode. And Anastasia, I will leave you the final word for the community. What do you want to say, to share, or do you have any needs actually in your different project?
Yeah, I mean, of course, thank you everyone for dialing in, listening in, and thanks to you, of course, Devin, for contacting me and inviting to this podcast. I would strongly encourage everyone to watch the real world asset space. Check out these different platforms. They give you data, they give you some metrics, and yeah, stay tuned for more updates on DeFactor's socials. And if you have any feedback, any questions, always open to that. I think that's my favorite part about working in tech, just collecting feedback and seeing what people have to say about what we build.
Okay, great. Thank you very much, Anastasia, and see you around.